Hello everyone, Joshua Hayes at BigWaveTrading.com. Quite an eventful week we just went through, and I want to thank everybody that watches these video lessons, because if you've been keeping up with the weekend video lessons, then you probably have stayed pretty safe, and or at least if you're in a drawdown. I mean, I'm in a small drawdown, but is it massive? No, I'm seeing some drawdowns that are just, I don't understand it personally. I've been doing this for too long. I understand when good markets are occurring, when bad markets are occurring. And to me, downtrends, bear markets, that's one thing. Those are very easy to navigate because whenever you have a real downtrend, you just don't have really a whole lot like to do. Whenever, for instance, we're in something like this, there's not a whole lot to do. The tough markets are something like this, the choppy sideways markets. 2015 was even a similar kind of tape overall. And there's other periods where there's been very bad choppy markets. But for right now, if we want to keep it simple, you want to really size up, have conviction in your trades, hold for the big gains when everything's lined up. One of the simplest things that I personally look for is just this bottom indicator that you're looking at. We call it the tickets indicator. It was created by my in-house member who's a coding expert, and he created it well before Claude came along. And I'm pretty sure if you just throw this chart up into Claude, it will figure this indicator out for you. We give it to members on a quarterly and annual basis, but whenever this indicator is stair-stepping higher below the zero line, potentially good things can happen. When it's stair-stepping higher above the zero line, great things can potentially happen. When it's above the zero line, even if it's stair-stepping lower, good things can happen. But once you get below the zero line and you continuously stair-step lower, bad things can happen. Now, whenever it's happening during a steady sell-off, hey, that's easy to navigate. You just don't have long signals. But this is where you're going to get chopped up. And if you don't understand the difference between going 400% long versus 200% versus 100% versus 50% versus 25% versus 10% versus 1% versus 0.5%, you know, the amount of capital that you use per long position, if you don't know how to modulate, it can be rough. But the simplest thing to keep you on the right side of the market when you know to push is when you're below the zero line on this indicator, you want to see it stair stepping up. If you don't see it stair stepping up, don't do anything. And that's what the QQQ looks like right now. What's it look like on the SPY? Same thing. We're just stair stepping lower. You know, there's not much to do right here. Let's look at what the IWM update looks like now. Now we're rolling over below the zero line again, and we're stair-stepping lower. So we're below the zero line. We're stair-stepping lower. There's really not a whole lot to do. Is there any area of the market to focus on? Well, let's look at our leaders. MDY, still above the zero line, but starting to move down towards it. DIA, we're below the zero line now. RSP, how's the RSP look? We're still above the zero line, so dips are buyable as long as you get follow through. But at the same time, it's also not stair stepping higher anymore, but it doesn't look bad. And then if you want to look at the XLP, by the way, guys, with the XLP, everything looks fine on the daily. Let's go to an hourly though, just show you how well it can work on an hourly. I want that longer. Do I have longer for 1 hour? 30 day, 1 hour, that'll work. But you see here, XLP hitting new highs, getting back to the new highs back here. Notice the tickets indicator is below the zero line. We sell off. So this is kind of what it looks like to me. If I look at the QQQ on an hourly time frame, you know, hey, it is above the zero line, but there isn't a whole lot of momentum and strength there. When I look at the SPY, we're stair stepping clearly below the zero line, IWM below the zero line. So even on an hourly time frame, we don't have everything lining up there. But now let's go out to the weekly time frame. Actually, let me go out longer, 20-year weekly time frame. Let me get this out. So if you just look at the weekly time frame, let's use the QQQ for this one. You can see when the weekly is above the zero line and stair stepping higher, great things can happen. Even when it's above the zero line, as long as it's kind of flattish, good things can happen. When it starts stair stepping lower and gets below the zero line, that's when bad things can happen. Stair stepping higher below the zero line, good things can happen. Stair stepping higher above the zero line, great things can happen. Then you dip, you go lower, you get back above it, and now you're stair stepping higher above a zero line. Great things can happen. When we look at this weekly time frame, you'll notice we have been stair stepping lower since December, and we're moving towards the zero line. You get below the zero line, bad things can happen. So that's what it looks like on the longer term. SPY, similar situation. Coming down towards the zero line again, potential for bad things to happen if we get below the 50 weekly SMA as well. The IWM still looks fine to me. RSP still looks fine to me. MDY still looks fine to me. So that's using the tickets indicator with the market. You want to be on the right side of the market. You want to push it. You want to have conviction. You want to really, really swing for the fences. You want it stair stepping higher above the zero line, and you can get really aggressive when it's stair stepping higher above the zero line. And I forgot to mention when it's stair stepping higher below the zero line, that's when you can take longs and be confident. But when it's stair stepping down, that's when things could be bad. And for the mid caps, notice here when we got that fake out breakout back in 2021, notice what that tickets indicator was doing. Stair stepping lower, then we get below the zero line, bad things can happen. So it's a good green light, red light signal, but there's different levels of red, different levels of green. So now let me pull up my telechart version 25 because I want to look at this. So another thing that's happening is while we're in between this price range and the QQQ, we are now in a high compression squeeze. Normally these fire opposite of the previous trend. That trend has been higher. So we'll see if this fires lower. The IWM recently had that high compression squeeze, fired to the medium squeeze, and is firing lower, proving my point. When you see a high compression squeeze after a long uptrend, it normally fires in the opposite direction. SPY, same thing. It got a high compression squeeze. It's firing in the down direction. So right now, we don't have what we want lined up for us. Things just aren't completely lined up when we look at the index level. Things are weak. They're not terrible yet. Could they get terrible? They could get terrible. And here's my biggest issue right now. One thing that I not showing everybody in this video lesson is if you look at the accumulation distribution line on stockcharts.com of the IWM, QQQ, SPY, and DIA, MDY, EQAL, RSP, you'll notice one thing with those lines. They're all at new highs. And the reason for that is because we continuously sell off via gap downs. But we open low, close higher, 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 open low, close higher. You're getting the point. This is subtle signs of accumulation by institutions, but it doesn't mean that you can't have a sell-off following this before then you start to get on the right track. So the accumulation distribution line gives me, some hope, I guess, if you want to use that term out there. But another thing, and the most important thing, are all these earnings winners. So I've deemed AAOI a game-changing earnings report. FSLY, same thing, and I'm long FSLY. But there's been other recent earnings winner. I only mentioned two yesterday. ALTO, AMPX. In a hot market, I'm buying above the closing price on both of these stocks. One is up 9% today. The other one's up 9% today. Meanwhile, the QQQ was down 1.5%. So I know what I'm looking for. I just don't have a right market. Kava is another one with a hammer candle today. LMAT I brought to members mention after the hammer candle a few sessions ago. That's still holding up. BW. Here's another one. I buy this one every time above the closing price in a good hot market. And then the next day, it was up 12%. In this tape, I'm balking. I'm balking on everything, and that's okay. Another one was AXTI. This is what it looked like on the log chart, was considering it for a new long. Check out the arithmetic. It's probably up too much in this market. Really? Because it went up another 56%. These are easy longs in hot markets. They are not easy longs in this market. And it's easy to bulk on moves like this. And it's okay for me to miss moves like this because of the way the tape looks. I look at figs. That looks good. I look at talk. Beautiful. High tide flag pattern forming. This is a flag pattern. I don't know if it's a high tide flag. It's a flag. It's not a high tide flag. But we connect this high to this high. We connect this low to this low. And you have an ascending triangle BOP is going the right way. Relative strength is still strong. Volume is low during this consolidation. Open bodies, good hammer candles. This is stuff that I'm interested in. So in a hot market, I have no problem taking these trades. But right now, in this market, with the way everything looks, with the distribution days, especially look at the red volume bars in the middle on the SPY and the QQQ. They're starting to really pile up. We got red BOP now in IWM, another negative. You don't see this too often. When you do, it normally is bad for price. We got it here and here, and then we had a little sell-off. This one could be worse, and this is why I think it could be worse. Did you see the jobs report today? So you have a contracting jobs report. Then you look at USO and look at oil. This is a monthly chart. This is a breakout on a monthly chart. You know what broke out on a monthly chart from a 4-year base recently too? Gold. What did gold do? 100% plus move. So is that the same thing going to happen? I don't know, but I do recognize this breaking out of a 4-year long monthly base on USO. But besides USO moving, have you noticed DBA, agriculture ETF? Look at the volume behind that today. Look at DBC already. This is a commodity ETF. Wheat, corn. Take that, plus another war, plus a weakening jobs market. It's going to be a rough year, I think. Midterm election year. I post this chart every day for members in the chat room. It's going to be a choppy, possibly violent year. So I'm sized accordingly. I have conviction accordingly, and I have confidence accordingly. The key thing that I don't want to do here is draw down in my swing account. Right now, the drawdown is under 5%. We recently hit new all-time highs, got a little bit aggressive. Now I've got a near 5% drawdown. It isn't there yet, but it almost is. If the market gets worse, I will hit 5%. But the one thing I will not let it do is hit 10%, 20%. My God, much less a 30 to 50% drawdown that I am seeing out of some traders out there. So you got to keep this all in mind, and you got to keep this all current. Will a hot market come back eventually at some point? Absolutely. You think the artificial intelligence boom is over? If you do, I'll remind you the internet. It didn't just happen in a couple of years. It took a long time to build out. And we still have some hot sectors holding up. UFO isn't dead yet. RKLB, nice base that it's forming out here. Let me get to a log chart. It's a little bit sloppy when I have it on the arithmetic. And then also PL. I like the way PL's looking. And RCAT brought this up to members yesterday. Ugly hammer today, so it's going to probably pull. But at least, not everything's dying out there. But at the same point, SMH is rolling over, so I don't think that is a good sign either. So a lot of mixed messages out there, but it isn't dead. Once again, we go back to that minerals and that metals market, NAMM. I love this consolidation that's forming out there. And surprisingly enough, for Monday's session, I incredibly have 3 new long ideas. I have no problem taking all 3, knowing what my level of conviction, confidence, and expectations for any new long signal is. So once again, would I put 400% of my account capital into any of these names? No. Would I risk 1R or 0.5R probably more than likely in these trades? Yes. So I have 3 new ideas: PDS, KRMN, and LB for Monday. Look at the bottom pane. Look at the relative strength line in LB, uptrending. Look at KRMN, uptrending after reclaiming. Look at PDS, uptrending. So PDS, I believe, has a 78 composite rating, number 5 industry group. Carmen, 99 composite rating, number 15 industry group. LB, 99 composite rating, number 30 industry group. They're at least in the top 40. So none of these are perfect, but here's what I'm going to do on LB. I'm going to set a buy stop above these recent highs, and I'll be calculating my stop and my risk unit to this low, and I'm willing to put risk 1% of my total account swing capital in this trade with this setup because it's an oil stock and a strong industry group giving me a legit setup. Doesn't mean it can't trigger, fill, and fail. So what I would do if I were you and you took this trade and it triggers on Monday, whatever Monday's low day is, there's your first stop, then your second stop, then your final stop. This will prevent a 1R loss on that position. Then when we look at PDS, my buy stop is going to be above the high of the day. Actually, I'm going to split it up because it's splitting hairs. This high and this high. And I'm going to calculate my 1R risk, yes, to this earnings day right back here, this low, not this low. Going to give it some porosity due to the overall market to this low. Super hot market. Let's say this had a 99 comp instead of a 78. Let's say it was a number 1 industry group instead of number 4 or 5, whatever I just said. I think it's 5. It's number 5. Then I'm using this low. And I'm not just risking 1R, I'm probably risking 2R. But instead, I'll do 1R above these highs and risk to this low right here. And then KRMN, this is aerospace defense name. I'm willing to get long above this high, risking 1R to this low. Let's say it triggers on Monday. After it triggers, whatever the low day is on Monday, that's your first stop. Then your second stop is right here. Then your final stop is right there. That would prevent a full 1R risk unit loss. Now, are any of those the quality of AAOI or FSLY? Absolutely not. But this isn't the market for me to be chasing these kind of moves. I need real setups. I got one with FSLY. It's holding up so far, but overall, it's a patience game right now. Conditions are not ideal. Now, I know I never ask you guys for any assistance, but hey, try to share this video with friends. If you got anybody that you know that's trading, that's having a tough time in this market, have them watch this weekend video lesson and the past 20 weekend video lessons. And you'll see pretty much I've been warning about the same thing and trading the same way during this entire past 3-4 months. So if that appeals to you, please do that. Like, share, subscribe, all those fun things. And then if you need more guidance, I do offer a service. I post these videos 5 days a week, new trade ideas every day if they exist. If they don't trigger, then obviously there's no new trade ideas. But I am around all the time for members of my website. So consider it. It's an option out there if you're having a tough time in this market. I really don't ask for much. So figured I'd mention it this time around because it seems to me, based on what I see on social media, a lot of traders are having a lot of problems. Guess who's not? The members of Big Wave Trading. All right, everyone. Have a great rest of your weekend. Aloha.